I think people understand that the Fed is trapped, that they're caught. And they're caught in a quandary of death by hyperinflation or death by depression. And when you have asset prices where they are right now and starting to shake, Paul Volcker in 1980 raised the federal funds rate to 19.75%. That's getting serious about inflation. What they're doing is jawboning. And I guess we'll see how much the markets can really take. But I think people are realizing that, and people are buying gold and silver right now, not to get wealthy, but because it is and represents wealth. And in a world of asset prices that are so crazy overvalued, there's nothing on the planet that offers the argument that silver does. Of course, the price action doesn't support it, the manipulation surrounding it, but from a standpoint of utility in industry, where solar panels are supposed to double or triple in the next year or two, and the same thing with battery-powered vehicles, and in a digital and green application or world where digital and green applications are expanding, there isn't an asset on the planet that offers what silver does. In the light of everything being blown up, silver is still under half of what it was. So that's why people are buying, because they're afraid. They see inflation, they see the frailty of their investments, and they realize silver is, even though it hasn't expressed itself yet, represents maybe the best value in the investment universe. I don't see anything that offers the value that silver does.
In recent weeks, the world has watched in awe as gold prices soared, breaking past the $2,100 mark and setting new records. But that's not all. Silver has been the dark horse, surging quietly and striking a staggering 133% increase in just 1 month. Expert Andy Schectman will reveal the threads of this financial tapestry, examining the strategic moves by banks that have led to a significant increase in short positions. As the West's traditional pricing mechanisms face scrutiny, we turn our gaze to the East, where exchanges in Shanghai, Moscow, and Dubai may soon reveal the true value of these precious metals. So stay tuned till the end as we uncover the implications of this rally.
My asset portfolio, which is almost entirely gold and silver, because I don't see a safer place to put it. And along the way, it's tough. You have to have strong fingertips. You have to hang on. You have to trust your conviction. And ask yourself, why is it the most concentrated short position in any commodity traded on COMEX? Why do they exert so much effort to hold it down when the fundamentals are so extraordinary? And I think one of the things that make it difficult for silver to express itself is the dollar hegemony, where the dollar rules the roost and the government behind it pulls the strings. But what happens if all of a sudden the dollar loses its singular world reserve status? What happens if Saudi Arabia, who is already in negotiations with China to sell oil for yuan, just like Nigeria is already doing? What happens if we see an accentuation of what's going on with Russia? How about the Belt Road Initiative with China connecting 85% or 80% of human population? And now there's this new route between Iran and India. What we are seeing is a de-dollarization, a move away from the dollar hegemony. And when that snaps, when that happens, things like the ability to manipulate the COMEX price, I think will be a thing of the past. And the only reason all of these nations aren't bitching about it right now is because that is what they've been transitioning into. They have been the ones accumulating gold and silver. They have been the ones quietly de-dollarizing. So they play along the game. If you can't beat them, join them type of thing until they are able to beat them. And they'll beat them by, I believe, challenging the dollar for singular world reserve status. The Chinese digital yuan has done close to $10 billion in transactions over the last year. With all of these countries coalescing together, Russia, China, India, South Africa, the likelihood, I believe, and these are all the biggest producers of gold and silver in the world, the biggest accumulators of it as well. What I believe will happen at some point is that they will challenge the dollar. They will issue a gold-backed or a commodity-backed BRICS nations currency on the back of the success that the Chinese have already had with their Belt Road Initiative and their digital yuan. When something like that happens, when the dollar loses its hegemony, when the dollar loses its ability through sanctions and edict and governmental decree to control the markets, that's when it snaps overnight. Now, it's not fun waiting for it. In the end, we'll be proven right. And I think there are very few things on the planet that offer the utility, the necessity, and the scarcity that silver does. In a world of blown up asset prices, it's the most undervalued asset on the planet.
Andy Schectman suggests a significant shift in the value of gold and silver is on the horizon. He points out that the Federal Reserve faces a dilemma between hyperinflation and depression, with asset prices becoming unstable. In 1980, to combat inflation, the federal funds rate was raised to almost 20%. Today, people are turning to gold and silver not for immediate wealth, but as a representation of wealth, especially when other assets are overvalued. Silver, in particular, is undervalued despite its growing industrial demand, especially in solar panels and electric vehicles. Its price is less than half of its peak, making it an attractive investment. Schectman himself invests heavily in gold and silver, seeing them as the safest options. He also discusses the potential decline of the US dollar's dominance. If countries like Saudi Arabia and China start trading oil in yuan, it could lead to a decrease in the dollar's global reserve status. This de-dollarization, along with the accumulation of gold and silver by various nations, could challenge the dollar's position and end the manipulation of silver prices on the COMEX. And he believes that the introduction of a gold or commodity-backed currency by BRICS nations could undermine the US dollar's dominance. This change could happen quickly and would validate those who see silver as an undervalued asset, with significant utility in scarcity. Schectman recalls the 1974 agreement that established the dollar as the standard currency for oil prices, which solidified its global dominance. However, recent agreements between Russia and Saudi Arabia suggest a shift away from this arrangement. He suggests that the end of the dollar's reign as the world reserve currency is near, and people should consider alternatives.
And I'm just going to focus on gold for one moment. Gold is doing what it's supposed to be doing. But remember, there's a 90% correlation between gold and silver throughout all of history. So if gold leads the way, typically silver will catch up and surpass it in performance. It's a depleted asset. It's massively needed in industry. It's hugely accumulated monetarily. And it's just disappearing. But in the end, mathematics, logic, and economics will prevail. And that's the best we can all do, is try to find something that's logical, that meets the test of economics, meets the test of mathematics, meets the test of old school logic. And you could check all three of those boxes. But sometimes logic and outcome in this crazy world have been inversely correlated until they're not. And that till they're not will happen. It's just a matter of when. Some people would say, with all the inflation we have right now and the craziness, why hasn't it happened yet? Well, and that is because this is all about dollar hegemony. We are entering a period of time, the Great Reset, or whatever you want to call it, where the dollar is teetering, where the system that we've built upon a mountain of debt cannot handle a rise in interest rate. And it's either death by hyperinflation or death by depression. Take your pick, one or the other. And in the end, I do believe that you will be proven right. Gold and silver will be the last men standing, as everything else tries to find fair value in a world where price discovery is all but impossible, even in gold and silver right now. We're still a long ways away from snuffing out inflation.
Despite rising interest rates, which typically decrease gold prices, gold remains near its high. This is because real interest rates, not nominal ones, affect gold prices. Historically, silver follows gold's trend, often outperforming it due to its industrial demand and monetary accumulation. Schectman emphasizes that logic, economics, and mathematics will eventually prevail, suggesting that gold and silver will emerge as reliable assets amidst global financial instability. Andy Schectman shares his insights on the future of gold and silver, suggesting a bull phase is coming. He believes that current financial practices, based on low interest rates and easy money, have led to irrational market levels. This has made people feel wealthy through their investments and home values, despite a decline in manufacturing. Schectman warns that the world is preparing to challenge the US dollar's dominance. He predicts that if the global community, which makes up 85% to 90%, starts rejecting the dollar in favor of other currencies, we could see a dramatic increase in inflation and interest rates. This could lead to a situation he refers to as the Klaus Schwab Great Reset, where hyperinflation and soaring interest rates cause a collapse in stocks, bonds, real estate, and the dollar's value. But why has gold been reclassified as a Tier 1 asset? and why central banks continue to buy it, implying that these institutions foresee the dollar's decline and are preparing for it. Schectman's perspective is that gold and silver will become crucial assets as the world moves away from the dollar, potentially leading to a significant increase in their value. Now, I hope this video will help you make your decision. So don't forget to like this video and also subscribe to the channel to stay updated about every trend in the market. Until then, keep exploring.